Hello, everybody. Due to a little technical difficulty, we're starting just a couple minutes late, but have no fear. We will wrap up this week's Market Huddle here and normal time about 10, 15 minutes from now or so. Today is September 14th, and the presidential election is just less than 51 days. So you're probably asking yourself, how is this election one of the most contentious, one of the most divisive we've ever had, at least in our lifetime? How is it going to impact our money? How is it going to impact our investments? How is it going to impact your retirement? This, by far, has probably been the largest volume of conversations that we're having with clients and potential clients right now. It's what do we need to be thinking about with our retirement savings with this election coming up? Should I keep everything as it is? Should I be pulling back? What are some of the planning areas that we need to be thinking about? And with this election just right around the corner, you're probably asking yourself, what should you be thinking about if there's a Joe Biden victory? Or what if there is a Donald Trump victory? How is the outcome going to impact our economy, our retirement savings? What does the future hold for things like Social Security benefits, Medicare, healthcare expenses, all of these different things that are hinging on November 3rd here? And one thing's for sure, a negative fallout from the election is going to be very detrimental to somebody that's in and nearing retirement, somebody that is right where many of you are. So on this week's Market Huddle, we're going to talk about what are 4 things that we need to be thinking about when it comes to the election that we can use to make sure we're doing some good planning. So with that said, I'll turn off the video and get my my PowerPoint up and running here, and away we'll go. This might take us just a second. Here is the disclaimer. If somebody can let us know that you can see my PowerPoint. Like I said, we were having just a little bit of IT issues here this week. Basically, I'm going to be talking about some things that I have no idea what the future is going to hold. So that's what the disclaimer is going to talk about. I'm not trying to make any forward projections. I'm not trying to even predict who's going to be our next president or how long it's going to take. I'm not an accountant. I'm not a CPA. I'm not an attorney. So all of these things is what this disclaimer basically says. So let's just jump right in. What's the number one area that I think we need to be planning around when it comes to our retirement savings as we get into this year's election cycle? And I think that the number one area definitely has to be with any potential uncertainty that could lead to additional market volatility. We're even starting to see that. A little bit of the last week, we had some pullbacks of some of our technology stocks pinned directly to the election. Probably not, but I think as we get closer to the election, we're going to start to see some of these, some additional volatility. In fact, recent Wall Street Journal articles titled "Traders Brace for Haywire Markets Around the Presidential Election." Now, in the article, they talked about how a lot of the Wall Street traders are currently preparing for the possibility of prolonged political uncertainty, which could stoke additional stock market mayhem. I think that a lot of what Wall Street's telling us is that we don't think that we're going to wake up on, it's possible that we may not wake up on November 4th with a clear answer of how the election results have come. So a lot of the normal, going beyond some of the normal hedging, we're starting to see a little bit more volatility come into the market as we're just 50 days out. Additionally, the article talks about the election worries amplify existing concerns around a weak economy, a possible second wave of coronavirus infections in the fall, and an already market that's hitting all-time highs. So there's a lot of bearish bets going on. We've started to see more and more out of the options markets. Keep in mind that this stock market here is come off of the March 23rd lows, and we've had the best 100-day stretch going back to 1933. Now, it's typical that markets tend to be a little volatile getting into the elections. In fact, if you look at historically, October, November always tend to be some of the wildest months anyways. But this year seems to be even a little bit more intense around some of the fears about what's going to be going on with the market. Now, let's go back here and just think back to 4 years ago. 4 years ago, it was Hillary Clinton versus Donald Trump. And going into the election, the markets started to act in anticipation that Hillary Clinton, who was leading by a large majority, was going to win. In fact, there was an article, a lot of talk out at the time that a Donald Trump victory would be bad for your portfolio. This was according to a JP Morgan analyst that said the Trump victory would cause, quote, markets to fall further. And a Barclays estimate suggested that the S&P would drop 11 to 13% should Donald Trump win. Wedbush analysts predicted the S&P would fall by half, in fact, if Donald Trump won. Now, we go back to what happened 4 years ago, and as we know now, Donald Trump did win this, and none of these predictions came to pass. We're going to continue to hear some of this out of the media, but stocks ended up soaring through the November 16th election and continued to perform well pretty much for the last 4 years up until COVID started to come into play here. Equity markets recovered to all-time highs. We've had a lowest unemployment, a lot of different things about the economy, despite all these predictions. So I think what I'm trying to say here is keep in mind that we're going to hear a lot of concerns about what's going to happen with the markets. We're going to hear some concerns about, my gosh, it looks like this candidate's going to win or this candidate's going to win. And there's going to be different voices coming from both sides talking about, how terrible this could be or how great it's going to be. I think we're going to hear more about how terrible it's going to be. And therefore, we're going to see a lot of this volatility. So what is kind of the takeaway from all this? Well, number one, in the long haul, the stock market has historically been a great place to build wealth, and stocks, while can be very volatile, a lot of times in these periods of volatility, we actually get a lot of the growth out of the markets that if we try to sell out of it and avoid some of the volatility, we end up missing the boat per se. So necessarily selling out of the market leading into the election may not be your best course of action. But with that said, also keep in mind that we have to protect our portfolios from market value adjustments. If you have a place that you're going to need, if you're going to need some money in the near term, let's say over the next 5 years, you need to make sure that you are protecting yourself from market value adjustments. It's a good time to be looking at not just asset or portfolio diversification, making sure that you have a diversity in different kinds of accounts, but also making sure that a certain part of your portfolio is protected from market value adjustments, looking for alternatives, perhaps even to cash or fixed income, to make sure that we have ourselves protected. Now, this is something that my team here is willing or we're able to set aside some time. I want to make sure that if you're, whether you're an existing client or maybe you've somebody has forwarded this to you, we have more and more families that are now finding more about what we do here at Secure Retirement Financial because of our existing clients that are forwarding on these presentations every week. So if you're in that boat, or maybe you've been kind of listening to these in a while and now would take some time, let's schedule 15 to 30 minutes of a phone call, what we call a strategy session, to discuss your current situation. Let's make sure that, number one, we can talk about what we may or may not see. Some of this volatility, remind you that the volatility oftentimes comes in periods of an actual increase in the market value. So if I sell out too early, I may miss it. Keep in mind, we've always said that if you are selling out of something, you have to be selling out of the market today. You got to be right twice. Not only do you have to be right that the markets are going to fall as we get in towards the elections, but you actually have to be right when you enter back in, and that it has to be a lower price. Historically, we see a lot of times this market timing doesn't seem to necessarily work out for you. So schedule 15 minutes. Let's sit down. Let's go through your specific situation. Let's address how we can help protect your portfolios, or maybe how we're already protecting your portfolios from market value adjustments. And if you have expenses coming up in the next 5 years, it wouldn't be a bad idea to consider how we can protect, making sure that we don't ever get put in a situation where we're taking out money out of a market that could go down to pay for to pay for obligations, but yet make sure that we're still invested enough that we can get some of the growth if we see that. Keep in mind, what we're talking about here today on this week's Market Huddle is how some of the presidential elections can impact your retirement. And what I'm really hoping to do here through these strategies is make sure that we are addressing some of the things we can do to election proof the portfolio. Doesn't necessarily mean that if the markets come down, we won't get wet, but let's make sure that it doesn't create a problem with your overall retirement planning. We all want to make sure we can get even more out of retirement, and addressing this right now is a great time to do that. Let's move on to the second area that I wanted to cover here today. These 4 areas that we need to be thinking about when it comes to our retirement and the presidential election, and that has to do with taxes. We've been saying it for years. We all know that the markets, the stock markets, and taxes are very likely to go higher in the future. But we are now sitting at above $25 trillion. It's an increase of about $4 trillion just in the last 90 days. It's a substantial increase. And while we've been saying for years we believe taxes have got to go higher, we know even more now that they are very likely to go higher. So we need to start looking at taxes. Now, while the elections seem a little bit far off, we do expect to see some of these things, and no matter where you're at, whatever the financial impact short term of the elections, there's one thing that I think has got to come through with everything going on since the beginning of this year, and that's that taxes, it's going to have to be taxing. We're going to see taxes go up. Again, we talked about the stimulus packages. We know that at some point, us as Americans, we're going to have to be paying some of this money back, and it's governments at every level. It's not just the federal stimulus that's been going on, but it's the state level, federal level, our local governments, schools, and what have you are spending a ton of money trying to keep education going. All of this is going to come out, and we're all going to probably be paying more tax at every level. Now, let's talk about some potential outcomes based on what the candidates have mentioned. So the first one, let's talk about what happens if Donald Trump wins and we see Congress turning red. There's been an enormous push by the current administration to raise revenue on foreign entities through tariffs and trade deals. And I think that we're going to see more and more of that if we see a Donald Trump and a Congress turning red. Now, that could bode well for some of the American manufacturing. It could also have some fallout around trade and what have you. So we need to be looking at how that's going to impact us. What if the Democrats win the Congress, or win the presidency? What if Joe Biden wins, but then Congress stays split? What does that mean for us? Well, what we're hearing, or what we're projecting here, is that we would expect to see an income tax system that has to be overhauled and moving towards more progressive nature. There's been a lot of statements out there about pushing some of the financial burden on those that are more wealthy. Now, the number I've seen float around a lot is this 400,000, but if history kind of holds true, I think that 400,000 probably trickles down to many of us that are listening here on this call. What happens, though, if Biden wins the presidency and we see an entirely blue Congress? If both the Senate and the House go blue, then there's little doubt about it. We're going to probably see a major tax overhaul. We're going to probably see some of the other areas like estate taxes coming back, and even some possible implementation of some kind of national sales tax. You know, in Minnesota here, we got a Minnesota sales tax, everything you purchase. The talk is that they're going to try to push for more of a national one. So regardless, what all this means is that there's a common denominator along all of this. Really doesn't matter who's going to win the election. I do think that we're going to definitely see some push, some increases in taxes, and I think that that leads us to the number 2 action plan I had for today, and that's to make sure that you have look forward tax planning into your retirement situation. There's probably not been a better time to start looking at moving money that's like in deferred accounts, your IRAs, 401ks, 403bs, into something that's tax-free, tax advantage, like your Roth IRAs. Maybe it's a LERP. Many people don't know this, but tax rates where they're at, and huge taxes might be right around the corner. So understanding that, one of the things everybody should take away as a homework assignment from this presentation today, from this market huddle, start to sit down and calculate if we see some market volatility. If the markets create an opportunity, how much of our money can we reposition into tax-free? That's going to depend a little bit on your current planning. It's going to depend a little bit on your tax brackets. It's something that we help our clients with. And if you are an existing client or you'd like to find out more about how we do that, just at the end here, make sure you set aside some time to take us up on that strategy call, where we can spend 15 minutes to identify the number 1 action step you can be taking right now to put yourself in a better situation. And when it comes to the presidential election, I think making sure we have taxes incorporated with our overall retirement planning is essential, and something we need to look at. So the first area we talked about, expect volatility, but volatility could also mean an opportunity for higher returns in the market. However, it could be scary at times. So we need to make sure that we're protecting money that we're going to need for expenses, protecting ourselves from market value adjustments. Number 2, start to plan today. We're at market high still. Yeah, we had a little bit of pullback, but we're still doing pretty well. Start to calculate. Sit down and calculate how much money could be moved and what the trade-off would be if we start to move money into tax advantage accounts like Roth IRAs. If we see something, and take advantage of the higher the taxes right now are lower, and better position your overall retirement to address higher taxes down the road. What's the third area? Well, it comes down to Social Security and Medicare. Some of these entitlements, some of these benefits that we've come to expect out of our retirement. Now, keep in mind, it probably doesn't matter here who wins the next election, whether it's Joe Biden, Donald Trump. They both have said the same thing. They have resolved to protect our Medicare and Social Security. With that said, how they plan on doing that is a little bit different. A Biden victory, Biden has said that he wants to go after those largest earners. He wants to go after the highest payroll earners, increasing payroll taxes on employees. And while Trump hasn't specifically mentioned any one area that he's going to increase, he has talked about how his deficit, he's indicated that Medicare and Social Security may have to be something that there's have to be some adjustments. I think the bigger area we're going to see some changes that are a little bit more predictable based on the election is going to be based on Medicare. Biden and the Democrats have stated that they'd like to see more of a nationalized health care. In fact, one of Biden's proposals is that he'd like to see Medicare eligibility drop to age 60 from 65, kind of moving towards more of a single payer system. Trump he's been pushing different alternatives in conjunction with insurance companies. He's really a big proponent of the Medicare Advantage plans. Medicare Advantage plans are somewhat similar to the traditional Medicare Part B and a Med Sup plan, except they incorporate them in together. They're probably going to cover additional things like dental, vision, and other services. But there's going to be a limited network of providers that you can go to. There's a lot of proponents and folks against both of these areas. Either way, I think that what we need to know is that we are probably very likely going to see changes around Social Security and Medicare, no matter who wins. And it's critical that you start to look at this in your planning. I think that making sure that we're optimizing things like Social Security, making sure that you have a secured retirement Social Security analysis, that's something we can offer as another action step here today. Because a lot of people don't recognize this, but if you've had an average or if you've been in the above average income around your career, a lot of the traditional rules for filing Social Security that we've been hearing about aren't going to apply to you. You want to make sure you have a customized analysis, one that takes your specific situations, one that's going to look at the impacts of these, your decisions around Medicare and Social Security around things like taxes, required distributions, spousal benefits, and more. It's really about the net income after tax that's important. So you want to make sure you're bringing that into your planning. I got one last point here. We've got 4 points we're talking about what the presidential election may mean to you. And this one here is really the one that I think is the biggest attack on families that have been savers. Okay. Continued low interest rates are almost guaranteed from this point. While we know that interest rates have been low for a long time, over the last few months, things have gotten a little worse. Now, the Federal Reserve, they've announced a significant change in what they have historically told us in the past. They expect to keep interest rates at near zero despite what happens with inflation. They've announced that they're okay with inflation growing a little bit higher than that 2% target that the Fed usually targets, and that therefore they're willing to keep interest rates lower at the risk of falling into some kind of double dip recession. Now, Chairman Jerome Powell has said he views the trade-off between lower unemployment. I'm going to reread this. He says the central bank has changed how it views the trade-off between lower unemployment and higher inflation. The Federal Reserve has unanimously approved strategies that will effectively set aside that changes the way that they've been looking at things over the last 3 decades, and that now the Fed is a little bit more okay with higher inflation. Now, what does that mean for us? Well, it means we need to be looking at the impact of inflation, the loss of buying power in our retirement a little bit more than we have. We can no longer use some of the traditional sources of fixed income or CDs to get a yield or a rate of return that's going to protect us from future inflation rates. You know, with CDs that are 1-year CDs are paying less than 1%. If they're going to have 2% inflation, you're safely losing money. So we need to start looking for other ways that we can get better rates of return with money that we aren't comfortable exposing to market risk. It means that there's a lot more precedence that you should be putting on mailbox income, money that's going to be more predictable, things like Social Security and your pensions, making sure that we're optimizing those. Going back to point number 3, let's make sure that we are optimizing our Social Security benefits and not making mistakes around our pensions that could impact us long term. Looking for other alternatives. You can't have all of your money in the stock market at all times because you're going to have expenses down the road. Then you need to protect yourself from market value adjustments, going back to our first point today. But yet, look for ways that we can get better rates of return without exposing that money to risk. I'm going to quote a Wall Street Journal article. It says the Fed plans to usher in a longer area of low rates. It just means, unfortunately, that these traditional sources of like CDs, savings accounts, and just using bonds could actually force you into having to take more risk in the stock market to try to keep up. And that's a dangerous game if you're in and nearing retirement. So there's some good news. Schedule some time, visit with one of our advisors here. We can schedule 15 to 30 minutes. Make sure we're addressing the number one action step that you can be taking today. Again, these offers are always available to those of you that are clients. If you're an existing client, maybe you've been even our office here somewhere in the past and just want to re-engage. Schedule some 15 to 30 minute discussion so we can address these 4 points. Again, I'll run through them real quick before we wrap up here. Number one, you got to expect more volatility, but just getting out of the market may not be the answer. Markets tend to perform, get some of its biggest growth a lot of times in the middle of volatility. So to sell off now, you may be missing a huge opportunity, but you've got to protect. You got to keep some powder dry. You got to make sure that if there is a market correction that you're well positioned. We can work with you as an advisory team to make sure that we are addressing that in your situation. Look at taxes. No longer are we in a period of time where taxes are likely to go higher. They're almost certain to go higher with all the additional stimulus that's been going on here. What we can do between now and the end of 2020 or between now and the election, let's calculate how much money could be repositioned into something more tax advantageous for you if the opportunity arises. If it doesn't, well, then maybe we do it yet before the end of the year, or maybe we already just have that in our back pocket for the next time. But I think you need to be looking at that right now. We've been doing that a lot with clients, and if you're not a client, we can help you with that as well. Third thing, make sure you're optimizing your Social Security. Make sure that you have a plan in place for some of these changes that we're likely going to see. Expect higher healthcare expenses, regardless of who wins. And then finally, look for other alternatives in a low interest rate environment. We can't always have 100% of our money exposed to risk. So let's make sure that we are looking at those things. And some of these are somewhat surprising on other areas that you can go that can do what you're trying to get with a better potential rate of return that'll keep up with inflation. Reading through my notes, it looks like we had some sound issues there. Hopefully that comes through. We're going to make sure everybody gets a copy of this afterwards so you can re-review it or again, schedule some time. I think, Dave, Trump has kind of said that he's going to probably keep some of the same things, but there are definitely going to have to be some changes around. They're going to have to start addressing the stimulus as we come out of this COVID. I am still in the camp that thinks we will. But that may be another, who knows how long we're going to have to, we're going to see some of this. So with that said, I hope everybody got some value out of today. I went a little longer than I wanted to. I had some technical issues up front. Either way, we're here for you if you need us. And I hope everybody else has an enjoyable rest of your week and has a great day.